right? I graduated college in 1975. And so 1975, that's it, right? 73, 74, as John Spears noted, right, the market correction happened. And what ensued was there was significant rotation, and that rotation was into stocks that had valuations that were extremely interesting and compelling, and companies that had been doing it for a long time. I remember at Tweedy, when I was auditing them, one of the comments was, they were like McDonald's. They were an overnight success that had been in business for decades doing the same thing, and the market recognized that was the place that capital opportunities were. And I can't help but believe we are in the same place today, right? You have the 73, 74 market correction. What happened to Nifty 50 stocks? One decision stocks. It didn't matter the price you paid for those companies. They were guaranteed to make you returns. Sounds kind of familiar. And of course, what happens is half of those companies were the Polaroids and the Kodaks of the world that went to zero. And then the other half took a decade to get back to where they were. So the idea that we potentially are at the same place today. One of the comments I loved was a comment about, what do you think about interest rates, where interest rates are going to be? Seems to me like you're asking, what do you think about the tail of the dog? They didn't ask, what do you think about the dog? The dog is, what do you think about inflation? Because the inflation controls the interest rates. People who waste their time thinking about what the Fed's going to do, in my mind, are not investors who have a 3 to 5 year time horizon who are buying and investing in businesses. They are market speculators, in spite of what they may say, because it is what's the performance of that stock going to be in the short term. So therefore, you're asking the wrong question. What happens to inflation? I have a question for you. Who here thinks inflation over the next 5 years is, on average, 2%? Nobody. Okay. Who here thinks inflation is 3%? Who here thinks for the next 5 years it's 4%? Who here thinks that inflation could be 5% or higher? Okay, so what's the 10-year treasury if inflation is 5%? What is every cash flow worth if you have a treasury at 6%, at 7%? What's the probability of that happening in the next 5 years? I'd say there's a reasonable probability of that happening. The valuation of every cash flow is worth significantly less than what the world presumes today, because the world presumes inflation, maybe it picks up to 4 or something like that, but really is manageable. That is not the condition of the world, right? Economics will show you over a long history that inflation is a normal course of economic events. And therefore, the implication for all valuations of all securities is significant.